Randy Warren is CIO of Warren Financial Services, and Lori Calvasina is head of U.S. equity strategy with RBC Capital Markets. Randy, you think the bottom may be near? If it isn't in already, you'd be right today, I guess.
Yeah, that's right. We definitely think the bottom is near. The risk-reward ratio looks very positive right now. I mean, I'm not going to say we're at the bottom, but I think the call that Morgan Stanley was making there is a little late in the game. Everything that they said is things that we already know. There's no new information there. We already know what the risks are. We already know what the trouble spots are in the marketplace. And we're probably sitting at about a 5% down risk and a 20% up risk over the next 6 months. And that looks like a really strong risk-reward ratio for putting new money to work.
And you think that despite the fact that the global economy seems to be sending signs of slowing, there isn't going to be the fiscal boost next year that there was this year in this country. Rates are continuing to go up, and the Fed is taking liquidity out of the market through tightening.
Yeah, you've got to climb the wall of worry. There's another Warren out there, this guy called Warren Buffett, and he basically said, be greedy when others are fearful. So we think that's probably good advice at this point. Be greedy when others are fearful. There's a lot of things to fear out there.
Lori, what are you thinking as you listen to what Randy just said?
Well, I do think there are a lot of things to fear out there. I just don't know that enough people fear them yet. I mean, I feel like I've heard more table pounding over the last few weeks saying you got to buy this dip, things are oversold. I just don't see that on my data. We've actually said, you know, we're sort of neutral to constructive through year end. We have 6 drivers of market performance. Most of those are neutral, so don't put me in the super bear camp by any category. But I really disagree with this table pounding and this, you know, sort of oversold assessment.
What do you need to see in order to be convinced that we are close?
When are you going to pound the table, Lori? Come on.
Not today. Not today. But look,
I pounded the table all weekend, man. I was eating like a
demanding more
crazy
pie.
Man. I want more pie. More. Go ahead.
No, look, I would say at times like this, when emotions are running high, I think you have to stay very, very focused on the data. So let's just keep it very simple and look at valuations. We've never really gotten any worse than a 16 times forward PE in this market. And guess what? That's right at the long-term average. We simply haven't dipped back down yet into cheap territory. That's one way you can look at it. You can also look at sentiment surveys, things like Market Vein, AAII. They've retreated. They haven't collapsed. You can look at futures positioning, and this has been one of our favorite indicators lately because it really told us we were in a trouble spot back in September. We've gone from basically all-time highs on equity future positioning in the U.S. Back down to May 2018 lows. We haven't gone to the 2015, 2016 lows yet. So, you know, I just think it's too early to pound that table.
All right, Randy, last word to you. And why don't you give us some of the stocks that you say are beaten down but may be poised for a rebound as you answer?
Yeah, absolutely. I think that there's a lot of wreckage out there. There's stocks that have been beaten up, and things like Boeing. I mean, they've got their own special problem, but, you know, Boeing's been beaten down. Visa's been beaten down. Intuitive Surgical's been beaten down. Amazon, Square. You just go through the marketplace, Visa, and there's so many great companies that have good, you know, earnings and good revenue that are, you know, just great buying opportunities out there. So we're looking to start putting money to work now.
All right, Randy, thank you very much. Lori, thank you as well.